Hi there, Etoro. It is Monday the 28th of March, and that means it's time to take a look at what moved the markets last week. Just before we begin, a bit of promotion for the Copy Traders Club. So myself, Gavin, and 3 other PIs recorded a podcast 2 weeks ago now. It was quite a lot of fun, and if you know Gavin and his podcast, he's not afraid of asking the tough questions. So I encourage you to take a look. I'll share a link in the description below. Alrighty, moving on to performance of the indices. So last week, the NASDAQ 100 gained a bit through the week, not as much as the week before, but we were rebounding off what seemed to be the lows at that point. But the NASDAQ has continued to climb through the past week or so. The S&P 500 is similar, although it's a slightly smaller gain through the last week. There were a few things that were the talk of the town last week. One of them were bond yields. So you can see that through the last 2 weeks or so, the yield on the 10-year bond has climbed 20%, 21%, although it's cooled off a little bit today. As we've seen through the past 2 years or so, when bond yields rise, we tend to see a bit of a fall in technology stocks in particular. And this is in part because people see bond yields as signaling that they think that a certain number of rate increases are coming down the line. And we got more or less confirmation of this in the middle of March when the Fed said they were doing exactly that. So I think bond yields are just slowly trickling up in anticipation of the however many rate hikes we see through this year. And then lastly, the K-Web ETF. So these are large technology companies out of China that are US based. We can see that it was choppy through last week. So there was that monumental 49% gain in the ETF over a week, and then last week it just has chopped around. And I'll talk a little bit about that in a moment. In terms of assets in the portfolio, so these are all the assets that I hold in my Etoro portfolio specifically. We can see that the 1 week gain, there's a bit of a mixed bag. Cryptos had quite a strong week last week, and then Asian and UK stocks were a bit choppy. On the commodity front, we're also seeing some commodities give back some of the monumental gains that they've been making through this year, although we see that natural gas is still, the 1 week price at least, is still quite a lot up, and the year-to-date price is, that's an incredible gain when it comes to something that a large part of the Northern Hemisphere relies on. So part of the change in direction for these commodities is because as price increases, it becomes viable to start sourcing your commodities from elsewhere. So supply chains have been broken or impeded through the war between the Ukraine and Russia. That drove prices up of certain commodities and other things, really. And as prices reach a certain point, it becomes worthwhile in terms of cost to start sourcing some things from other places. And as the world or those particular industries get confirmation that those supply chains are going to be okay, actually, we see the prices moderate a little bit. That's not always the case. I'm using a very broad brush here, but it's part of what's happening at the moment. And last week we saw quite a big jump for cryptos. Bitcoin has been ticking up slowly over the past few weeks, and we've finally seen some of the smaller cap coins starting to catch up through the past week or so. As always with crypto, when prices go up, there's quite a lot of excitement, and that can create a bit of a self-fulfilling prophecy, attracting more people into cryptos and driving prices up further. But, people have been quite burnt. Cryptos haven't enjoyed the strong bull market that they've seen in some periods historically. Right, the other talk of the town, and I don't have all of them up here, has been the yield curve inverting. I think I mentioned this last week or the week before. When the yield curve inverts, it doesn't always, but it can signal that a recession is coming. In fact, every recession has been prefaced by a yield curve inversion, although not every yield curve inversion results in a recession. So what is the yield curve? It's quite a nuanced thing, and it depends on what data point you're looking at. There are actually several different yield curves. But on screen, I have, for example, the yield of the 10-year treasury minus the 2-year bond. And on the right, I have the 30-year bond minus the 5-year bond. And if the result of any of these subtractions in terms of yield ends up being negative, it means that the yield curve has inverted. So the short-term bonds yields are now higher than the longer term bond yields. And in normal times, this is not how it works. Usually you get paid more in terms of interest, return on a bond, to lend your money, which is what a bond effectively is, a debt instrument, to lend your money for a longer period of time to whoever is issuing that bond. In periods of uncertainty, particularly where there's a feeling that growth is going to slow materially over a period of time, we start to see that longer term bond yields drop lower than short term bond yields. And for example, this is a very commonly quoted spread that is between the 10-year bond and the 2-year bond, and you can see that it's getting very close to zero. In fact, it's been trickling down for quite a long time now. Analysts were getting quite excited earlier today, or maybe it was last night, when this spread briefly inverted. So why is this important? Well, people like to be excited and media likes to push negative messages. And so now that there is a potential yield curve inversion coming, the media is pushing it quite hard. This has been picked up on Twitter, although the Fed is kind of downplaying this at the moment. What's quite interesting is that if you look back at the last taper tantrum back in 2013, something very similar occurred. The next thing that happened is that the bull market resumed. I mentioned earlier about commodities and price and supply chains. So this was some interesting news that came up last week. So the US plans to boost supplies of liquefied natural gas to the EU. So the EU is trying to wean itself off of Russian energy sources, gas being one that it relies on quite heavily. This is interesting, not so much in what it gives to the US or the EU, but what it takes away from Russia. This would be the beginning of crippling the Russian economy, potentially for the long term. Now on to China. So a few interesting things happened last week. So Beijing, the government in China, has effectively said, we are happy to comply with your auditing requirements, and they've started instructing companies to let the US look at their books. Other interesting goings on, well, Alibaba surprised with an increase in the amount of buybacks that they have planned, and we saw that stock jump quite nicely. However, on the flip side, we also saw Tencent report earnings, and they were pretty weak, and the outlook that Tencent gave to the market wasn't fantastic either. I do think that this is probably short term. The Chinese economy overall has been having a bit of a tricky time, as we all know. And lastly, while the EU is weaning itself off of Russian oil and gas, it looks like China is picking up the slack. So maybe Russia will be okay anyway. The other big item of the week is that we saw the UK budget announced. For those that don't know, this is when the Chancellor talks about any changes that they will be making to the economy. Overall, people in the UK are still recovering from the economic shock created by the pandemic, and the Chancellor is trying to ease some of the challenges that individual households might be facing. There's lots of debate about whether the things that he's done will provide any kind of material change, but I'll leave that up to the politicians. Something you might have noticed is, looking across the various media outlets, is that there is less and less news about Ukraine and Russia being published now. The world and media are a strange place, and our collective attention tends to move on very quickly, despite the terrible things that are still happening in Ukraine. This happens time and time again. I don't know if anyone can remember the fairly recent Evergrande collapse and how it was going to spread through the entire financial system around the globe and create havoc that would go on and create recessions everywhere. And then was forgotten just a few weeks later. We, the humans, have a very short attention span. However, things are developing in the war. The war has, I think it's entered its second month now. And as it wears on and both parties involved wear higher and higher costs, I think that we become a little bit closer, we inch a little bit closer to the war being over. We've seen several rounds of ceasefire talks fail so far, but hopefully we get a better result out of this round of talks. All right, and what's in store in terms of the economic calendar this week? There are a few interesting data points, but the things that most people are interested in are GDP growth, right now at least, as well as inflation numbers. So we will get some GDP numbers out of the US as well as the UK, so I look forward to getting that information. I don't think we'll get any big surprises here, although the UK has surprised to the upside in at least the month-on-month GDP growth numbers fairly recently. And then on Friday, we'll be getting manufacturing PMI numbers, out of the UK and the US. Again, these are very interesting data points, and I'll be digging into them to try and understand if we can expect a recession later this year, although right now I don't think it's on the cards. And finally, this week we start earnings season again. Now we're right at the beginning of earnings season, but we will see Micron reporting tomorrow. This is a company that I hold in the portfolio and I think is going to do fantastically over the years to come. And then 2 weeks later we see the big US banks reporting, which is what most people consider the beginning of the earnings season. All right, that's it for this week. Two things that I wanted to let you know is that I will be adding funds to my account on the 1st of April. I've put a post up and a video up about what I'm doing and what your options are. And the second point is that once a month I will be doing, instead of doing this video on a Monday, reviewing what happened in the markets in the week just gone, I will be providing a portfolio review for the month that's gone. So I'll do that probably on the first, maybe second Monday of every month instead of this update video. All right, that's it, and I'll speak to you soon. Goodbye.